Knowledge is power. Make an impact by learning more. Call us right now for more help at 866-945-8070. The e-commerce inventory cycle lives on the balance sheet. A lot of business owners probably don't realize this because you're not accountants, you're not trained to look at things this way. And a lot of business owners, in my experience, the first and sometimes only question they want to ask me is, how much money did I make? Which brings us to the profit and loss. What you may not realize is that almost the entire process of the inventory cycle lives on the balance sheet. In fact, the only time we see the P&L or the profit and loss in this process is when we've made a sale, which is the last part of the whole inventory cycle, right? And at that point, and only at that point, do we see activity on the profit and loss. We see the sale and we see the cost of goods sold at the same time, both coming from that sale, right? The income is what we sold the products for. The cost of goods sold is the cost of the inventory that we sold coming out of inventory, which is on the balance sheet, and going on to the profit and loss. So I want to illustrate this for you by going through a series of transactions that I feel outline very well the entire inventory cycle. And this is especially important for e-commerce business owners because the whole key to your business is the inventory that you sell. You're selling it online. So the first thing is you place an order with a supplier. And oftentimes there's a lag between when you order something and when you get it, which means you don't want to enter a bill right away, because as soon as you enter a bill, we're adding the stuff into inventory and we're recognizing that we have a payable, even though we may not get the products for 30 days and we may not owe the money until it's confirmed that we've actually received the goods. So what we'll do is we'll want to create a purchase order. So up here in the Quick Create, under Vendors, we're going to go to Purchase Order. And of course it tells me purchase orders is turned off because I haven't used it yet, which is going to be the case for you if you've never used them before. So notice they give you this nice little link here that takes you right to the place in the settings where you can turn them on. It takes you into accountant settings and expenses. Let's see how to go there directly in case you wanted to be proactive and didn't want to just stumble on that message. We're going to go to the gear icon and we're going to go to accountant settings and we're going to come over to expenses. And then over here, we're going to say use purchase orders. Check that off. That turns it on. It gives us some custom fields we can use. We'll skip that for now. We just want to make sure that they're on. And now I can go to Quick Create and go to purchase order and enter a purchase order. And a purchase order is going to look and feel a lot like a bill. So we're going to enter the purchase order for our supplier. Let's backdate this a little bit. I'm recording this on May 29, 2018. Let's just say it's February 1st. And over here, we're going to list each product or service that we placed an order for. So I have some Under Armour gear items. And I want to order a bunch of these. I have no idea what these items actually cost. I did go through the actual Under Armour gear website just to play around and get some sample data out of it. Right, let's say these are $15.50 each, and I want 100 of these. And we'll get 100 of these at $11.50. Okay, so I place a purchase order, and when I hit save and close or save and send, it's going to create a purchase order for $2,745. Before I do that, let's duplicate the tab because I want to run a balance sheet and profit and loss so that as this gets recorded, we can see the impact. Let's go over to reports. Okay, we're going to run our balance sheet. And I'm going to run these for all dates just so you can see, and frankly so I can be sure that we're seeing absolutely the impact of anything regardless of when it happened, right? And so as you can see, initially I've got nothing but a balance sheet with $1 million in cash on the books, right? Let's duplicate that so we can also look at the profit and loss. Also run that for all dates, and you'll see that there's absolutely no activity on here. In this set of books, I've recorded nothing that impacts the profit and loss. There's only a single transaction recorded, which was to set the bank account up with enough money so that we could pay for whatever we needed, right? Wouldn't it be great if every business could start off with $1 million? Okay, so now let's save this purchase order. And what I'm going to tell you before I save it is that there's going to be absolutely no impact on either the balance sheet or the profit and loss when I save this. I'm going to prove that I'm right. I'm going to save and close, and then I'm going to explain why that is. So I go here, I refresh the report, no change. I go here, refresh the report, no change. Now the answer very simply to why nothing happened is because a purchase order is what we call a non-posting item. It has no impact on any of the accounting. All it is a placeholder. It just says, hey, I've ordered this stuff from this supplier, and often we'll send it to the supplier to confirm what we've ordered, and they can match that to what would be a sales order on their end to make sure that we're on the same page about what we've ordered and what they're going to ship us and what we're going to get charged for the stuff when they do eventually ship it out and send us a bill, right? So that's the first part of the e-commerce inventory cycle is we place an order with a supplier. Very simple, right? Make sure you've got purchase orders turned on in QuickBooks Online. And then place the order, pick up the phone, email, go on their website, however that works for you and your suppliers. And then you create the document in QuickBooks Online to memorialize the fact that you've placed that order, that you know that that inventory should be coming within whatever time period it is. And these are things you're going to want to start to track. Different suppliers, how long do they take to ship? This kind of data is going to become important. It's going to play a very important role in your ordering process, right? How are you going to determine when you need to order based on whatever your order quantity is? A lot of that's going to be based on how long is it going to take to receive the goods. We want to make sure we don't run out, right? So really, really important to start keeping track of each of your suppliers and how long it takes them to ship you your orders, right? Now, let's say we have to send them a prepayment for that order. Okay, and this is a good time, by the way, if you haven't already, pause the video, get caught up with what I've done, enter a purchase order, make sure you've got purchase orders turned on, and then you can resume the video. Okay. So we're going to send a prepayment to the supplier. A lot of my e-commerce clients have to do that. They have suppliers in, let's say, China, and so there's definitely a long shipment period, and they require sometimes payment in full up front. So we have to send a prepayment. Very, very simple process for that. We're going to create an expense, right? However it's paid for, whether it's out of the bank account or on a credit card, you'll choose the source account. The payee is going to be iSupplier. Now, it's offering to sort of tag that purchase order, and we don't want to do that because we're not paying for the goods. We're prepaying. If they decide to ship or we decide to cancel, we'll get this money back, presumably. So we're simply going to record this to an account called Prepaid Inventory. And we're going to need to create it. And some of you are going to need to create it. And it's not an expense. It's an other current asset. And QuickBooks, of course, makes you do the detail type. So again, we're going to just choose other current assets, and it's still called prepaid inventory. Save and close. Okay, and let's say they require a full payment up front. So we have to send them the full $2,745 prepayment on PO number 1001. We should be this detailed, right? And we have it right there, we can see. So we know eventually that for sure this is the prepayment that went with that particular purchase order. Okay, so notice we're not choosing the items. This is because we haven't actually paid for inventory here. All we're doing is, sending them money in good faith to make sure we get our products. All right, so we're going to say save and close. Okay, so that's the next step of the process. So in case you think you may need to do prepayments, or you do, then again, set that up the way I did. Create the other current asset, record a prepayment as though you would, or if you have a real live use case, then do it on that. And, pause the video, get caught up, take care of that part, and then resume the video once more. And next, we're going to take a look at what to do when you finally get the products and get a bill along with those products. Okay, so what we're going to do next, now it gets easy. We've kind of dealt with the hard parts. And by the way, now we do have an impact before I record anything else on our balance sheet. So if I come down to the balance sheet, you'll see now I have prepaid inventory. And all I did was move money around the balance sheet. The bank had $1 million in it. Now it's got $2,745 less than that because we essentially transferred money on the balance sheet from cash to prepaid inventory. It's still a current asset. It's still liquid. Presumably, if we canceled the order, we'd get this money back. It would go right back into the bank, right? So it's all we've done balance sheet wise is move money around, and of course there's still zero impact on the profit and loss. So so the only thing we've done so far that impacts any financial statement is we've made that prepayment, right? Placing the order did nothing to the balance sheet or the P&L. Making the prepayment moved money around on the balance sheet, no impact on the P&L. It's important to understand this stuff because it helps you get clued in when something doesn't look right. And it's also important in terms of analyzing your business and the financial impact of your transactions, especially with an e-commerce company where your inventory is the whole key to your business. It is central to your entire business, right? So now we're going to enter the bill. Now we've gotten we've gotten the goods that we prepaid. So we're going to create the bill. Under the quick create, as soon as I pick iSupplier as the vendor, it brings up my purchase order, and this is all I need to do is click open. Actually click add. Open would actually take you over to the purchase order. Add essentially adds it into this bill and says, okay, this is what we got. Now at this point, you'll want to carefully review what you received, your packing list, and make sure that you got everything. If you got, in any case, anything less than what you ordered, you simply reduce the quantity. If the rate has changed for any reason, you change the rate right here. Reducing the quantity, though, on this is very important. It's very important that you understand the impact of reducing the quantity. What that will do is it will leave that purchase order open with the remaining quantities. Because if they're on back order and they're going to be shipped later, that's important to know. If for some reason you're never going to get them, then after we create this bill, we're going to want to go close out the purchase order and get rid of the remaining items. So again, we have to pause here for a minute and look at whether or not we're getting all of the items. If we didn't get all the items, will we eventually get the rest or won't we? And based on that, there's going to be more steps to take, right? So creating the bill is just that easy. So if I say save and close, right, we've saved it. Notice now we've got an inventory asset for $27.45 because the bill actually put inventory on the books. We also have a payable for $27.45, but we shouldn't because this prepaid inventory is going to satisfy this, right? So that's how we're going to deal with the bill payment because we're not actually going to pay this bill. We've already paid them for it, right? So what we're going to need to do is apply the prepaid to the bill. The easiest and cleanest way now to zero out the prepaid inventory and get it applied to the bill is to go into the bill. We're going to actually reduce the bill to 0, and I'll show you what I mean, and I'll show you how we're going to do it. In this case, I'm going to leverage the fact that it's a transaction I just recently entered. So if I click here in the search box, there's my bill. I just created it. So let's go back into the bill. If not, you'll just find the supplier and find the bill. Now here we have all the items totaling $27.45. Watch this little trick. We're going to type in prepaid inventory negative $27.45. That's going to zero out my bill, and it's also going to pull the money out of the prepaid. Let's go run the balance sheet because again, that's where all the action is happening. Notice nothing's happened. Still nothing's happened on the P&L. When I save this bill, this updated bill, it's going to reduce my prepaid and it's going to reduce my accounts payable. All that's going to zero out. We're going to be left with $27.45 in inventory. So ultimately, here's what we did. Let's follow the money. We took money out of the bank and put it into a prepaid. When I save this transaction, we're going to get to the sort of end result for now, which is that ultimately I transferred $2,745 first into the prepaid, then through a bill into the inventory. So ultimately I transferred $2,745 from cash to inventory. I converted cash to inventory so I could sell it and make a profit. Right? So you're starting to see how to sort of visualize this process and how to really understand the inventory cycle for your e-commerce business. Let's go ahead and save this updated bill. Save and close. I'm going to say yes. I know what I'm doing. And now it takes us back to the balance sheet here. And exactly like I said, 0 prepaid, 0 payable, $27.45 still sitting in inventory. Let's go back over here and run the profit and loss. And notice nothing has happened still on the profit and loss. I wasn't lying when I said most of the inventory cycle occurs on the balance sheet. Now, last piece, we sell the inventory, right? So let's do that. Let's record an invoice. Let's go. We'll go back over here so I can keep my reports up. We're going to go here. We're going to create an invoice. And QuickBooks thinks I'm new to this. So let's sell it to Always Right. Okay, now I have to see what the actual inventory is. I want to make sure I sell an item that we actually have. Okay, so UA, I don't even want to try and pronounce that, Tocoa. So I know we have some of these. If you click in the quantity, it shows you exactly what quantity you have on hand. I love that, especially for when I'm doing videos like this, so I know I don't oversell something. Let's sell 50 of them. I don't recall what my cost was, but I definitely want to sell them at a profit. So let's go into the bill. All right, and that was these guys. So $15.50. Let's sell them for $45 each. Okay, what else we got? We've got 30 of these. Let's sell 15 of them. $1.50 was our cost, so let's sell them for $5. Nice little markup, right? All right, and then we've got 100 of these. We paid $11.50 each. Let's sell them for $25. Now, like I said, this is when I save this, we're going to see impacts everywhere now. Let me get out of the bill. I don't need that anymore. Back to my report. Right, so here's my balance sheet. Let's run this for all dates again. Here's my profit and loss for all dates. So here's what's going to happen. The inventory asset is going to go down at cost, right? Based on cost of goods sold. This is going to be reduced. The difference, that cost, is going to go here onto the P&L. It's going to hit cost and goods sold, right? And then the other thing that's going to happen is we're going to see income for the total of this invoice. Income is going to go up by $23.50. And our accounts receivable is going to increase by $23.50. So we're going to see accounts receivable on the balance sheet for the total of the invoice. We're going to see the cost of the inventory come out of inventory and go onto the profit and loss. And we're going to see the sale go onto the profit and loss. Okay? Make sure you followed all that. Make sure you understand it before I hit save and close. Pause the video. If you have an invoice you can record similarly, get your balance sheet and P&L up so you can see the impact. It really helps deepen your understanding of this stuff when you do it this way. I'm going to hit save and close. Let's go to the P&L first. Like I said, $23.50 in income. Cost goods sold $809. So that's going to be the amount by which inventory has reduced. Sure enough, it has been reduced to $23.50. I'm sorry, to $19.36. Accounts receivable has gone up from 0 to $23.50. Right? Let's do one more thing before I wrap up. I want to show you how you can really get behind this entry to understand what happened. Let's go in through cost of goods sold. I'll go into the invoice. And this is especially for my accounting friends here, but small business owners, take a look. If we go here to transaction journal. So I went into the invoice under more transaction journal. We can see exactly what's happening, and most importantly, we can see exactly where it's impacted, what I just demonstrated for you, and we can see how it all balances. So we increased accounts receivable by $23.50, right? We have revenue of $22.50, okay? We have revenue of $75. Wherever we see sales of product income, right? So because it's separated by product. So we have one product that's sold total of $22.50 for whatever number of units it was, another one that sold for $75 for the number of units, and another one that sold for $25 for the number of units. And what we're also seeing is it's lined up nicely. Cost of goods sold for that item, $775. Notice this is really easy to see. It's coming out of inventory. Credits decrease assets. Debits increase cost of goods sold, right? So we see the $70.75 related to this item. We on the $22.50 we see the same thing, cost of goods sold, and here's the revenue. And on the last item, same thing. We see the $11.50 going out of inventory into cost of goods sold and the sale. This is how it all lines up, right? And so the cost of goods sold is on the debit side along with the accounts receivable. So it totals the $31.59. The sales, the income that we're recognizing, is in the credit column, as well as the reduction of inventory at cost is also on the credit side, and it adds up to the $31.59. So this is, if you're ever wondering how these entries balance, and this is what I also mean when I often say that all QuickBooks is doing is providing you with nice forms to get the real accounting done, which is what we're seeing right here. This is the real accounting. These are the debits and credits. This is how, in the background, money is getting flowed when you record a transaction from the balance sheet ultimately to the P&L, and then eventually back to the balance sheet again. And what I mean by that is, if you notice our net income for the period, let's go back to our report. Profit and loss. Let's run it for all dates. Net income now is $1,541. Notice on the balance sheet it closes out to the equity section. So the P&L ultimately leads us right back to the balance sheet. Whatever our net income is for the period has to get closed out to equity. If I've made a profit, that increases the equity or the value of my business. If I lose money, this will be a negative number. It means I've decreased the value of my business because I've cost my company money by running at a loss. That, my friends, is the e-commerce inventory cycle and why it lives on the balance sheet, or substantially on the balance sheet. As always, I hope you've learned something, had some fun along the way. I hope you're having an absolutely fantastic day. Don't forget to leave your comments in the form of your questions or concerns or feedback. Anything you have to say, I'd like to hear it. I'd like to respond to it. And I look forward to seeing you around the web.